Now that we're officially in a crypto winter, the next obvious question is, where is the bottom? And today we're covering 5 proven methods to help you time that crypto bottom and then also make sure that you're not investing too early or too late. So this is a very, very important video. I want to hop right in. The first thing we're going to cover is what's called a Z-score. Now, I promise that this is a lot more simple than it looks. Basically, we have 3 lines on this chart. The blue line is the market cap, total market value of Bitcoin. The orange line is the realized value of Bitcoin. This is actually the value of Bitcoin when it's first transferred to another wallet. So it adds up all of the Bitcoin after it's first transferred to a wallet and then takes the average of that price, and that is the realized value of Bitcoin. Now, the Z-score here in the red is basically a standard deviation calculation that takes all the extremes between the market cap and the realized value lines and gets rid of them. So we're looking at more of a concrete look of the actual value. Now, the 2 areas of this chart I want to point out are this red area up here and then this green area down here. Now, this is what we're going to use to actually define, hey, is it a good time to buy or not? Now, looking at these 2 areas, what I want to point out here is when we are trending with the Z-score line in the red area, that means that historically the market value of Bitcoin has been higher than the realized value of Bitcoin. Now, that helps us indicate that Bitcoin is likely overvalued in that case. So that helps us identify, for example, here, if you had been able to spot this Z-score going into the red zone of overvaluation, you probably would have been able to take some profits here at that 60 to 69K mark before we fell down here. Now, if we look historically at this green area, whenever the realized value is actually above the market cap value, this tends to symbolize that we are undervalued as per the value of Bitcoin. And you're going to see that here reflected in that trend in the green area, and then as well here too in this green area. Now, what we're looking for is this drop below 0.1. That tends to signify that we are headed into more of a bear market outlook. So you can see that here, this line is 0.1 right here, above here. And once we enter there, you can tell that, we have kind of that sideways bearish movement for quite a while. Now, what signifies a return to the upside and more of an upward trend is when we break that 0.1 once more, which is right here. And when we break that, you can see that lines up right about, and that's a squiggly line, but right about here, you can see that trend reverses and we start going back to the upside, right? So that's kind of the basics of Z-score and the basics of what you need to know for that. Basically, we want to know when that Z-score is in the red zone. That typically means that Bitcoin is overvalued. And then when we enter this green zone, we look for that 0.1 right here. So we've actually dropped below that now. So we are in somewhat of an undervalued area for Bitcoin. I think a lot of you guys know that if you've been following Bitcoin. But what we're looking for here is actually a reversal. And once we cross that 0.1 again, we should see that bearish trend reverse. So that is our first kind of tool to use. I'm going to drop these in the link in the description below because it's just so important to be paying attention to these. Now, the next one we are going to look at is called a 2-year moving average multiplier. Now, this is Bitcoin over its entire history. And what we're looking at here is a green line, which represents the 2-year moving average, and then an orange line, which is actually the 2-year moving average multiplied by 5. And why that's important is because it tends to basically line up with a corresponding Bitcoin top. Now, what I mean by that is when you see right here, this moving average times 5, once it crosses this peak, and you can see Bitcoin value crosses that 2-year moving average times 5, you can start to see we see a pretty significant downtrend. Now, historically, when the value of Bitcoin drops below the 2-year moving average like this and like here, typically that becomes a very, very good time to buy Bitcoin, and it leads to outsized gains. Now, that doesn't mean every time, right? So there's always a chance that, clearly here, right, you could have bought right here and then been like, well, it's still going to drop a little bit lower. So it's not a perfect science, right? But over the long term, that tends to be the best time to buy Bitcoin for outsized gains, as you can see here as well. And what's interesting is that we have actually just dropped below that 2-year moving average here. So according to this chart as well, we're in an undervalued scenario. Now, this doesn't mean that we're necessarily close to the bottom. As you can see here, we've kind of barely dropped below. We dropped significantly below here and significantly below here. So I still think we still have quite a ways to go. But in terms of actually valuing Bitcoin, according to these last two trends and these last two calculations, we are looking relatively undervalued in terms of historical price. Now I want to move to our third indicator. Now this is going to be RSI, but this is important. So this is looking at RSI on the daily chart for the entirety of Bitcoin. Now, RSI is not good just by itself. I wouldn't, lean on RSI by itself. I would use RSI with a combination of the last two tools that we talked about and then the next two tools that we talked about. RSI alone is not going to help you identify a bottom. And here's a good example right here, right? So if you thought, once we went to sold here, we drop under 30. And if you had bought here, yes, you would have gotten these gains. But if you held, you also would have lost money, year to date. So just with that in mind, it is a caveat, but RSI does help us time bottoms pretty well as well. So looking at the past, the most recent two kind of bear market pullbacks, we dropped to an RSI just under 15. And then actually our really, true last bear market in 17-18, we actually dropped all the way down to, between a 9 and 10 RSI. And to give you perspective, 20 is oversold. So we were way oversold in the last bear markets. Now, that is really, really key to look at because right now we're seeing the RSI play pretty heavily to the downside. So we've been oversold 1, 2, 3 times in the last few months, but we've never reached kind of this area, this kind of golden area for undervaluation, right? So we still have quite a ways to go on. We can become way more oversold is what I'm saying. We can have a lot more selling pressure and we still might not reach that kind of RSI Bitcoin bottom. So the point being that I don't think we're necessarily at a bottom. I don't even think we might not even be that close to a bottom. But typically speaking, when the RSI is below 20 and between 20 and 15, it's a decent time to accumulate Bitcoin. Does not mean that it's the bottom though, right? Because we've seen here before, we've tapped, we've gone much lower, right? We've gone, between 9 and 10 and then down to 15 previously. And currently we're hovering around 21, 22. So we do have a lot more space in the RSI to go lower. With that said, I want to take into account our fourth trend. Now, this is really, really important because the specifics of this chart will lead to different conclusions. So what I mean by that is if you looked at the daily chart of this compared to the weekly chart, it's going to look a lot different. Do not use the daily chart for this simple moving average. This is a 200-day simple moving average. You have to use the weekly chart. Otherwise, you're going to be deriving incorrect conclusions. So let's break this down really fast. The 200-day simple moving average historically has been a pretty good indicator of being near the bottom. So we saw us tap this, and I know it's a little bit close here, but we saw it tap back in 2016 in that bear market. We saw it bounce here as support in that 18-19 bear market. And then we saw this act as support in kind of this COVID drop as well. Now, what's interesting is that we've actually significantly gone below that. And this is part of my theory for why we're bouncing today is because we just absolutely dropped straight through that 200-day simple moving average. And there's a lot of people watching that level. There's a reason why I'm sharing this with you, right? So there's a lot of people watching that level. A lot of people saw that as a good undervalued opportunity to buy Bitcoin. They pounced on it yesterday. You saw us go all the way down to 17.5, 17.9. They pounced on that buying opportunity. And now we're seeing a little bit of a bounce, right? I think we're playing between 19.6, 19.7 right now at the time of recording. That does not mean that we're getting, a beautiful bounce, right? And then going back to the upside. That does not mean that. It just means that we may be in the next couple of days, we might be looking at a small correction to the upside, sideways movement, and then we'll likely, come back down to actually find that true bear market bottom. But this is another trend that's very, very easy to keep up on, and using this in tandem with the other three that we just talked about can be super, super powerful, right? So that is the 200-day simple moving average. You want to watch for that to turn into support. And then if we see this if we come back here and it turns into resistance and we go back down, then you better be ready for 12 to 15K Bitcoin and get the bags ready to deploy, right? So that is what I wanted to cover in terms of the first four indicators. We're going to move into the fifth one. This is more of a macro news research angle, but it helps to serve as the context and the backdrop for when you can expect a crypto bear market to reverse. So going into this, it's all about keeping an eye on the funding of the entire crypto industry. So recently we've seen, and this is a great indicator of a crypto bear market, crypto winter, we've seen some of the biggest crypto companies lay off sizable amounts of their employees, right? Gemini laid off 10%, Coinbase laid off 18%. But even though it seems like it's like the end of the world and, no one would expect Coinbase to be laying off people at this rate, it's par for the course. This is consensus back in, 2018 when we had that bear market back then. They laid off 13% of their staff, right? And this is just one of the layoffs that happened back then. There were plenty of layoffs. But what you want to look out for is, one, when these layoffs begin to cease or die down, and then two, once funding starts to pick back up for these companies, right? So in 2018, 2019, this is late 2018 when this happened, we saw a lot of layoffs that second half of that year in 2018, but followed up in 2019, we saw an incredible rate of rapid growth in terms of the investment, in terms of the VC funding that was coming into crypto. So you want to keep an eye on, from a macro standpoint, you need to keep an eye on the crypto news in terms of how VCs are operating and where the money is going in crypto, because that will also give you a good sign that the headwinds are changing. So hopefully those 5 proven methods give you a great idea of where you need to be at in terms of when you want to buy Bitcoin. Obviously, none of it's financial advice, but a lot of these, Z-score, 2-year moving average multiplier, RSI, in tandem with the simple moving average. If you use all 5 of these, you're going to be pretty well equipped to, either say, hey, this is a good time to buy, or no, this is a bad time to buy. As long as Bitcoin is undervalued, you're really not in a bad scenario. But that's kind of what I had prepared for you guys today. Hopefully this was helpful. If it was, drop a like and let me know what else you want me to cover. We'll see you in the next one.